Good morning, everyone. Welcome to Ainsley News. It's Monday, the 29th of November. If you've already got your Christmas tree up, you're in trouble, but you're getting a bit closer. Today, we're talking about a fascinating journey, how we got here and what to do. There was a tweet on Saturday with, while it had a Bitcoin ending, is just as applicable and bullish for gold and silver. It's about money, and it is a fantastic journey through history that everyone should read or listen to. We don't know how to implicitly endorse the author, but to be fair, he largely drew from interview with Roaul Pal, who we also rate. This from him. I will read this out. It's a bit of a Twitter feed, but we'll wander through it. James Rothen. Let me tell you a story. Inspired by Roaul Pal and Breedlove22. It all started at the height of the British Empire and the assassination of Franz Ferdinand, the start of World War I. Germany was the rising power in Europe. Thanks to technological advances, the world saw its biggest war to date. 20 million people died. Then came the Treaty of Versailles. Germany had to pay 132 billion gold marks in reparations, roughly, by someone's flawed research methods, 3.5 times their GDP. The Germans used a nifty government trick, currency debasement, to help them pay their debt. Chart here showing them how they did that. Germany was poor and struggling as a result. 80 countries, starting with the UK and including the USA, jumped off the gold standard. Out of these conditions, Hitler came to rise and Nazi Germany started World War II. Technology advanced further. The atom bomb, etc., etc. 70 million people died in that war. When the war ended, people, especially those in the US, in euphoria, made a lot of babies. They came the baby boomers. Post-war fiscal stimulus and the consumerization of war tech led to the golden era of the 1950s. The global population saw growth of 30 to 40%. The world economy globalized. Bretton Woods happened and pegged the currencies to the US dollar. Countries increased reliance on each other that prevented World War III. The US is unofficially appointed as the superpower to protect the free world. Then, in the 1960s, the first baby boomers, the biggest generation ever until then, entered the workforce for the first time. Demand exploded. Prices exploded. The biggest demand shock the world has ever seen. 75 million boomers became economically active. As a result, the US struggled to keep up with deficits, losing a lot of gold supplies and completely depegs from gold altogether. The world is now a fiat currency system. We then get to the Great Inflation of the 1970s. This is not necessarily a monetary phenomenon, but a demographic one. More and more baby boomers demanding more and more goods and services. We have a demand shock. Here comes the big problem. Since the 1970s, real wage growth is flat for the next 50-ish years. Too many people competing in the workplace. Supply outstrips demand. No need to raise wages. Money decouples from productivity growth. The problem is that as fiat money gradually debase, asset prices start to rise, but wages don't. That is why we sit with an angry far right and far left at the same time. They've been left behind, economically. Politics are downstream of economics. Then it gets really ugly. Margaret Thatcher, in an attempt to convert Labour Party supporters to Conservative votes, gives low-income earners the chance to buy their previously house pricing at low prices. As a result, a new generation of low-earning debt slavery was born. Ronald Reagan used the same playbook in the US, making credit abundant. The rise of Wall Street in the 1980s. Stock and property prices rise, but people can't buy proportionally because their wages don't go up. In an attempt to catch up, people start borrowing money, buying assets, and hope that they go up. The snowball starts. The more people borrow to invest, putting their pensions in stocks, the more the prices rise, in search of the American dream. People often confuse being rich with being in debt. And that's the way with the fiat system. It incentivizes debt to buy assets in the hope of getting ahead. Then the crash of 1987 happens. Alan Greenspan cut interest rates outside of a recession, a new trick in the central banker's playbook, showing first signs that the Fed will bail out Wall Street. Then we move on to the fall of the Berlin Wall and communism. China also starts opening up. World Trade Organization sees the light. Workers in developed countries now all of a sudden compete with workers in developing countries. Although consumer prices dropped, wages stayed the same, ruining the American working class. We then see a big boom in the Asian markets backed by dollar leverage without dollar earnings. And it all came crashing down, not long before the crash of LTCM. Greenspan cuts rates again, bailing out Wall Street for a second time. This was probably the last time in history the free market could do its thing without the whole financial system crashing. So with the Fed having everyone's back, it was a free-for-all. Everyone leveraged up, goes all in on the US stock market because no one wants to touch emerging markets. We see one of the biggest stock market booms, followed by the dot-com bust, and then the property boom. The boomers start retiring. The labour force participation rate goes down, and so does the velocity of money. And we all know what happens next. The global financial crisis hits. To no surprise, the Fed steps in again and cuts rates. But this time, it's not enough. So what do? They print money. No, that sounds wrong. We all know that if you print money, the value goes down. So we start quantitative easing instead. And the printer goes brr. We didn't have any other choice. In a debt crisis, we can't allow the collateral to go to zero. Otherwise, the whole system goes down with it, like what happened in Argentina. Everyone is Austrian until it happens to them. As the Fed continues its quantitative easing, CPI doesn't rise. It looks like it's actually working, but, and a big but, we get to where we are now. The everything bubble. Everything can't be in a bubble. Bubbles are measured by looking at the price of one asset class relative to another asset class. So you can't have an everything bubble. Asset prices rise not because there's value going up relative to other assets, but because the value of the denominator is going down. This is what we call debasement. Since 2008, the only assets beating debasement are Bitcoin and the Nasdaq. So what we are witnessing now is the transition from one generation to another. 75 million boomers are retiring. 85 million millennials are at what is supposed to be their economic peak, but not much to show for it. Free capital is funding innovation. Innovation that will probably put the 85 million millennials out of work in the not too distant future. And the central banks can't stop printing because then it all comes crashing down. So what can we do as millennials? Can we undo this mess? Yes, we can. Bitcoin. It's a call option on the future and protection against currency debasement. But we still have a rough few years ahead of us. The right is saying to cut taxes. The left want the super rich to tax even more. Fiscal stimulus will lead to more debasement. And we can't go Austrian and let it all burn. It's too late for that. The exponential age is about to happen. All jobs are at risk. How will people get money? We don't know yet. But to some extent, lucky for us, the price of everything digital, including energy, is going to zero in the longer run. Energy is everything. Everything is energy. Will the future be dystopian or utopian? Humans had a way of ending up somewhere in the middle. Today we talked a little bit about Bitcoin and how that might be the answer. Bitcoin is a value by virtue of having intrinsic value by virtue of constrained supply. And this is the same for gold and silver. This is all about money or real money. Bitcoin and gold and Ethereum and silver each have their nuances and arguably all deserve their place in a balanced portfolio. What we've talked about today highlights in a very big picture way the need for that balance. And as our trademark says, balance your wealth in an unbalanced world. And that's news for today, everyone. Thank you for joining us. Bit of a Twitter read there for news today, but it was kind of fun. Hope you enjoyed it too. If you do want to go through and read it, jump over to ainsleyBullion.com.au. You can also buy gold, silver and platinum over there too through our website. Have delivered to your door. Jump out and check ainsleywealth.com.au for all things crypto. If Bitcoin's tickled your fancy, now's the time to jump in. That's ainsleywealth.com.au. And of course, goldsilverstandard.com. That's our own crypto built and backed by real gold and silver. We'll catch you tomorrow for more news.